Good morning. Welcome to the Brew. I'm your host, Lex. And today is the end of Greek week, which started last week and rolled into this week. Don't ask, right? So we're going to kind of tie everything together. We're going to look at a couple positions today on Trade Hawk. We're going to chat about a little bit about the market maker edge, so we understand as retail folks what's going on, and hope we pull this whole deal together. So let's get to it. And the opening bell is right behind us. Mal.
Good morning.
Good morning. Actually, the opening bell is in front of us, and I'm thinking, wait,
Right.
not behind us. It's in front of us. What am I thinking? So what's going on, Mal? I think you mentioned earlier that you're on the beach or something like that.
Yes, we're in
You're
the
house sitting, all that kind of good stuff.
Crown Julie Ocean. We're in Corona del Mar. It's coming live to you from the beach.
I love it. I
Because
love it.
I promise we're studying hard for the people out there. I'm not just getting my tan on. I promise.
Yeah. You're getting all the show notes together, right? We're not talking crypto today.
Okay.
Don't bring it up.
No crypto.
No
That goes
crypto.
for all of you guys too. No crypto.
It's okay. We'll get to crypto. I think we're gonna get to crypto in a week. Yeah, we're saving it. We're gonna get to crypto in a week.
It's a behemoth. It's really important, and it's a behemoth. So it's really important to go in strong because I think there's a lot to say on that.
Yeah, there is.
Yeah.
I think secretly you're a crypto gal. I think you love it.
I think I am a freedom being, and I don't know. I'm still researching, so I want to make sure my learnability index is always wide open, and I'll take all advice in, and then just distill it into what I think the future should be. But
Okay.
whether I'm this or that,
we're not replacing any currencies with crypto, are we?
I am no, not yet. I am all about biomimicry. So whatever nature does, we should probably follow. And they are definitely decentralized, nature itself. So
wow.
So I might be on that road.
That's
I'm leaning towards Bitcoin. But I have really important news. So a friend of mine, two friends of mine, made me a mug for the brew. And they captured me. That's me and my dog surfing.
Oh,
that's me in the capsule.
Does your dog actually get on the board?
Not yet. But I'm gonna. This is my new mug forever.
I love it. I love it. Good for you. That's awesome. We in Chicagoland have had California-esque weather for the last 2 weeks, pretty much. Very nice here, except we don't have like waves. So
are you going to move this way? Are we selling you? Is California selling you?
No,
not yet?
No. Just I'm a visitor.
Okay.
All right. So today we are going to we talked about the Greeks last week. So we kind of covered, each one independently, right? I think we kind of lumped Delta and Gamma together, but then we had Vega, we had Rho, Theta, Delta, Gamma, right? So we kind of covered them all. And the way we typically talk about them in the industry is Delta, Gamma, Theta, Vega, Rho, in that order, right? However, oh no, they fixed it on my computer. So I was going to say, however, we have it backwards on the computer, but I just looked up and it's actually not backwards. They fixed it for me. But that's just a protocol, how the derivatives run.
I'll come up with a good acronym for that, for the top 5 Vegas.
Yeah. It's all Greek to me or something like that.
The Greeks will inherit the earth.
So, and then from our discussion, we kind of emphasize certain Greeks over others, I suppose. And I think as we talked yesterday, Rho is sort of the bad child, not the bad child, but it's not bad. It's just
the ignored
one, unembraced child, because to me, the retail world and all my dealing with them over the last several years, they don't put on positions long enough dated to really have much Rho risk, right? So anything like, I think around 60, 90-ish on the high end days on in, not the worst situation for row exposure. I mean, 90 days, you start getting a little bit of it because we talk about 3-month T-bills as being the risk-free interest rate, right? So that's about the threshold. But when you start working in closer to the 90 days, all of a sudden the other Greeks kind of take over, right? And I'm going to we'll talk about all this on my screen share, but I'm going to throw delta out of the equation a little bit.
Okay.
But the other Greeks, gamma, theta, vega, they have a little bit of an effect in that 90-day period. Okay, you had a question. Sorry, Mal.
Yeah, I wonder if, as women start to jump into trading and they seem statistically to be more long-term traders, I wonder if that row will take center stage. I wonder if that, and especially with, I had a question for you about inflation. So how, inflation is the biggest, worry topic today. So how does that coincide with row? And I know I'm skipping ahead because we're going to do those in order, but
yeah.
So
so you're saying that, let me make sure I'm clear. You're saying that your lady friends like to have things a little bit more post-dated in terms of positions.
Right. We I think we buy into the things that we value. So it's value trading. So yeah. So if the numbers and the charts are saying don't go in, we'll go in anyway because we love it. So we'll take a loss on the short, on the upfront, and then we tend to have great gains towards the end because we're trading on intrinsic value.
Oh, did you just say intrinsic value? Are you doing a crossword puzzle this morning? You just said intrinsic value.
Right. I need another.
Anyway, okay. So yeah, I think here's the other thing with row. You asked the question earlier. Let me answer that one. So you said, with inflation on the forefront, does row become a factor? And of course it does, right? So especially the kind of inflation we saw. The government decided that they needed to, raise interest rates gigantically, which they did, right? So all of a sudden, row is now changing, weekly or monthly for that matter, right? So, but row isn't one of those things where it's going to just kind of get you overnight, like gamma can, or even theta can kind of hit you over a weekend, or vega that can happen overnight. You can come in the next day and volatility can get crushed. And if you're long volatility, guess what? You're getting hammered, right? You're going to lose, or the opposite way as well. But row is one of those things you kind of know what's happening. You pay attention to what's going on in the government, what's going on with inflation. You sort of can avoid getting an exposure, right?
Yeah.
Market makers, on the other hand, have a different kind of take, right? Remember, from the beginning of our conversation, there's two worlds, or there's probably more than two worlds, but there's two worlds that we like to talk about. There's a market making community, which I was a part of, okay, and there's a retail community, which I'm now a part of, right? So it's a nice little bridge to kind of get to understand both a little bit. The market makers, as we said, their edge is built within that bid ask, right? So if they're buying bids and selling offers or asks all day long, they have very little need for having any sort of Greek exposure. Okay, no exposure to those Greeks. So they don't need to have that, because why would they take directional risk or vega risk or theta risk necessarily if they're building up a gigantic money machine by buying bids and selling offers? That's where their
frequency. Their edge is in the frequency.
And in the fact that they can buy on their bid and sell on their offer, right? Unlike a retail person who has to try to get a best possible price, right, by buying close to the offer and selling close to the bid. If retail folks got midpoint, they'd probably be very happy. Additionally, the retail folks that I've chatted with, they tend to trade things that are liquid. That makes sense, right? I can't buy a bid, I can't sell an offer. Let's trade something that's liquid, like Apple or Spiders or Tesla, things that don't have wide bid-ask spreads. So then their negative edge of getting into a position is mitigated by the fact that liquidity bails them out. Does that make sense at all?
Yeah, and liquidity just meaning there's a lot of shoppers out there, so a lot of A lot of
Yeah,
market
the
availability.
market is flourishing. You know, you go to those farmers markets, some are kind of not so great, and then others are really flourishing. So,
Right.
you know, the really flourishing ones, the really liquid ones, there's all kinds of activity going on. So, you know, I always tell, excuse me, I always tell people who ask me, I said, listen, if you're in the retail world looking at a screen, you're giving up edge to get into the position. Okay, that's number one. You're giving it to the market maker, right? But that's their job. That's what they do.
Yeah.
So find something that is liquid, that you understand and you can trade, and have some ability to create a directional bias of sorts and take advantage of a spread, right?
Right.
And you know, I think they get it generally. I mean, why would you trade something that's $3 at $4 is a market, 3-4 is a wide market. You're going to get killed on that market when you try to get in and out of it. You're going to give up all of your edge
Got
on
it.
that one, right? So you should be trading as a retail person looking at a screen things that are pretty liquid, or you're going to have incredible patience,
Right.
or be really dumb, one or the other, one
Right.
of any of the three, right?
Okay. All right.
Um, so let's go to my screen real quick. So
Ooh.
this is
Hello.
a ocean blue version of Trade Hawk. So what we have here is we have the option chain here, right? And we have our tickets down below, and there's all kinds of things in here. So charts. Ask me a question about charts. Say, Lex, are you a chartist?
Are you a chartist?
No. Why am I not a chartist? I don't. So being a market maker, I don't understand charts. Why? Because we don't care which way a stock is going as market makers. All we care about is
the
bid
spread.
ask trading all the time, right?
Got
So
it.
this is like sort of hieroglyphics to someone like me. You know, I learned it a little bit once I started moving off floor, what this stuff can mean. This is a graph of Apple, and it's over
But just to clarify,
365 days. Yep.
just to clarify, you built this. So
Yeah, well, because retail traders really love charts.
yeah.
So they want to go. So, I mean, look at this. This is Apple. Can you believe this chart right here of Apple?
No.
Oh my God. This is, oh, look at it. It says, hi, Lex. She's so pretty. That was an example of a note. Oh, look, I could change it too. But look at this chart. I mean, this is, you know, a daily chart. It is straight up in Apple. This stock's unbelievable, by the way. I mean, there's
Right.
been virtually no pullback on this stock from, where is this thing? This is earlier in the year, right around January, here where my mouse is, to now. It is literally just chainsawed higher. So, you know, you can't even begin to say that this is tradable unless you're just long it. So let's see what I am. This is going to be so much fun. All right, back to my position. Do you see this up here, Mal? Tell me if you can see what I'm circling.
Yep. See it perfectly.
Okay, so there's a typical Greek profile. Now, again, to a retail trader, they probably look at this and go, who cares? To a market making person or a pro, this is everything. So look at my deltas. Long 9,400. That's a lot. Okay, so if I were in the market making community, there's no way I'd have that amount of deltas. It would be near zero. Okay. Next line, gamma 54, positive. Okay, do you see it?
Yep, I see it right
Okay.
there. Top right.
So what does that mean? That means in this position, I have positive gamma. As the stock goes up, I get longer deltas, right? Because gamma is the rate of change of delta. And as stocks go down, I get shorter deltas because I'm positive gamma. Okay.
Yeah.
If I were negative gamma, would be the opposite. Okay. Now, positive gamma has a bit of a trade-off. Look at theta, negative $220. So the theta in my position, in this Apple position, I'm paying $220 a day to have this position. That's what theta means to me. Okay. Now, every one of these options has theta to it, right? And my summation of everything I'm long and everything I'm short comes out to be negative 220. Now, you know, I'd say for my purposes, you know, from a pro trader past, that's a number that we would always want to have near zero and or a little positive. Now, not every market maker believes that. You know, there are firms back in my day that prefer to have positive gamma and negative theta because they want to take advantage of big movements in the markets.
Got it.
Right. So typically, though, what we saw was a lot of market maker communities who like to sell premium. Okay, and remember what premium is. Premium is the extrinsic value of an option price. So it's the stuff above parity if it's in the money, or it's all that stuff that is out of the money. That's the extrinsic value, and the fluff and the time value, and that's the stuff that decays.
And the
Okay.
recipe of that is time and volatility.
Well, the recipe of that is, yeah, volatility can certainly affect your theta, right? If the higher the implied volatility, the bigger the prices of these options are, and thus the bigger time value premium, and they have to decay more, right? So that's a good question. So in high volatility environments, your theta, if you're long these options, is going to be a bigger number, right? Just makes sense because there's
Yeah.
more time value premium to this. Okay, let's do this. Let's take a little quick break here. We'll pick up
Ooh,
this
the
stuff. Let's
news.
go. Yeah, let's go to the Marquitos. I don't know what to think. I hope Reuven has this up and it's green numbers. I just love green numbers. Do I have
Drum
to
roll.
unshare? I think I have to unshare.
Drum,
Maybe.
drum roll.
Hold on. Can I add this to the stream? Oh dear. There's nothing being shared. I'll let Reuven figure that out.
Right.
Or I'll just look at it on my screen. Hang on a second. Let me get it up here. I don't even know what the market's doing. I got to find out. What do you think, Mal? Up or down?
Well, I think earnings reports came out. Those are nice. I think inflation's worries are going away, and I think we're just been a general bull movement.
Yeah.
So probably green.
Yeah, it's a little green. Well, the Dow again. It's kind of a marquee number. It's up 20 points, nothing, unchanged. Nasdaq down about 100. So that's a decent move. S&P is down about 15. That's not a decent move, very little. So again, a very light day. VIX is 14.1, so it's up a little bit. I think we're gonna have a little crazy sell-off here one of these days.
You do?
That's what
Market
yeah, I think
correction?
so.
Why is that?
Not a massive one. I was looking at we're gonna talk about why with Vana and Charm, which are second order Greeks.
Okay.
So on Thursday we're going to talk about that, but with the guys in the Traders Workshop, I
Very
think
cool.
we're kind of building to a number. So you never know.
Okay.
All right. What else? Nothing happening. Oh, OCC volume. I like to look at that number as well. So yesterday it was I think it was around hang on, I'm going to pull it up. 37 million yesterday, which is, you think that's good, bad, or indifferent?
I think that would be a little low. I think it's normally higher in the 40s. Is that correct?
Yeah, that's correct. So actually, I take that back. It was 41 million yesterday on the last day of July. Average yearly volume year to date is 44.4, just under. And then July average is 43.6. So 41's lower, right? Typical with these market moves. Yeah, it's not that
It's
bad.
summertime.
Summertime, slow. People are at the beach, like you. See, they're taking a vacation.
Don't tell anyone.
So no, that volume's decent, but not massive. There's the markets. Reuven's back. So that's it. I just described that. Not much going on there. So can't say much about that one other than it's innocuous.
Okay. Ooh. I'm gonna write that. That goes in the lexicon.
That's right. The lexicon. There you go. All right, let's go. Let's finish up with this thing here. So theta, we talked about higher volatility, implied volatility, greater theta if you long those options, or if you short them, it's greater positive theta, right? And then the Vega in this position's 229. See that number up here? Okay. And remember row from yesterday, 47, right? That's nothing. Okay.
And just give us a bracket of what's normal, what's out of what's an outlier on each of those. Could you?
Yeah, so that depends, right? It's a good question, but it depends.
Portfolio based.
It's portfolio based. So what do I mean by that? Like everything else in life, these numbers are always relevant to the size of your equity, the size of your account, right? So if you have a smaller account, these numbers on the screen might be, reasonable, or reasonably large for that matter if you have a small account. If you have a gigantic account, this is nothing. So any numbers that are under 3 digits up there, you
Yeah.
know, that's like you don't even have a position, which I kind of don't. I have a directional position. Why? Look at my delta. So I've been long Apple forever, I think, and I'm almost 10,000 deltas long with this little bitty position. The position is meaningless beyond
Right.
it. It's the whole thing is overwhelmed by the delta in this case, which
Okay.
isn't a market making position. This is not a market making position. This is a retail investor position. So this is an investment, not a trading position because of the delta.
Okay.
So they're just overwhelming. Because if I wanted to get out of this thing, I'd either sell my stock, which is 8,800 shares. I'd sell that stock, which would take out all that delta. And then I'd have virtually no option position on with 54 gamma and very small things. But I'm not doing that. You know, I have a reason for having this. Right.
And is your reason the Vision Pro, the Apple Vision Pro, their
I don't
new
even know what that.
VR?
No, I don't know what that is. Tell
You
me what
have
that
to look.
is.
So the Vision Pro is their answer to, I think it's augmented reality, but it's their VR that they just announced coming out in 2024, but it is pretty incredible. Take
It's
a look
pretty
at
good.
it. Yeah. So
Okay.
Google
I
that when you're
love it.
done.
I love it. Okay, good. So you can see that these are. I'm on my portfolio page. You can see these. This is Tesla, for instance. So I have a position in Tesla. Right now, am I long or short Tesla? Let's find out. So I'm gonna go to Tesla. Oops, no, I'm not. I got to use the Apple machine. I love the Apple machine.
This is some beautiful tech. Can I just say that?
Oh, thanks. Thanks. I love it. It's so easy to use. Okay, what are my deltas here, Mal?
Negative.
Negative
Negative
6,300.
6,003.
So again, I have an opinion here, right? The deltas are overwhelming this position. So gamma is only 17 negative. Look at my theta, collecting theta here, right? Vega, I'm short. Okay. And my row, look at my row. Pretty big, right?
Interesting.
It's a big row.
Why? And just to reiterate, why is that high? Why is real high with Tesla?
Well, I've got this crazy position on here. So the at the money option, where row is generally the greatest for these things.
Yeah.
I'm short 300 of those. See them on the screen right here, right? So that's giving me all that number. Remember, row on a call is a positive number, and I'm short those. And the one I'm long is way up higher. So I've got the short call spread on. That's the reason for this delta, and I've got just a little bit of stock against it. So it's a short delta play. It's directional, right? Because I just feel that that Tesla was a little bit overdone, right? And therefore, I wanted to be short. So I did it safely. Okay, we'll talk about these spreads in another episode. We're almost done here.
Ooh.
Yeah, so this is the whole Tesla position right here. So look how well it does to the downside. Doesn't do so great to the upside, right?
Yeah.
So again, very directional, very unmarket maker like, right? Because I have a directional bias on this thing.
Okay.
Right. And then if I bring an Apple, let's see if I can pull Apple in here real quick. Give it a second. Apple's much different, right? So it's skewed the other way to the upside. So feeling a little short about Tesla, feeling a little long about Apple. Okay.
Do you think Tesla's being treated fairly out in the markets?
You know, I mean, look, Tesla was under $100, several months ago, right?
Right.
I think it has had a monster rebound. I thought it was a little bit overdone, the rebound. I mean, look where this thing was, down here. This is right in the beginning of the year. So right around 100, right? I mean, this is crazy of a run. Although we had a little loop here, but then look where it is now. So now all the chartists would be like, okay, here's the deal. What's going on up here with all these up downs? So it's kind of consolidating up here. I think it's found its level, sort of thing.
Okay.
And trust me, I did not get short up here. I got hammered. I was probably short somewhere in here, and then I kept averaging up. That is not advised. That is not a prescription.
But it's how you learn.
That's how you learn. You take your lumps. I'll tell you, the retail side is way harder on this machine than buying bids and selling offers. This is way harder.
Okay.
I got to have opinions on this stuff, which I don't like having. So anyhow, All right. Well, anyway, I hope that makes sense. So the prescription is always that when I talk about this subject about market makers versus retail, the key takeaway is always going to be edge. Okay, and we're going to go deep into the edge with market makers in another episode. But as a retail trader, when you trade in that market, and I just want to reiterate this so people understand, you are giving edge to the market maker. It is negative edge. Okay. And you're never going to get around negative edge as a retail person who has to buy offers and sell bids or thereabout. Okay. Now, I don't want to discourage you and be like, oh, great.
I was going to say,
thanks for the great pep talk. Yeah, I can't wait to live the rest of my life trading. So you just told me I got negative edge. Be a jerk. But there's good news, right? Good news number one: find a liquid product. Spiders, apples, Teslas. Okay. Things that trade a lot that are tighter. Your negative edge give up is not going to be that bad there. Okay, so you can do that fine. Number two,
but Buffett trade.
Go ahead. Sorry.
Buffett would agree and say, follow the indexes.
Absolutely. Have a trade plan. Okay. And the trade plan has to be educated. Now, educate is a big word, right? I know so many educators in the space, and they do very well in the retail world. They have a system of doing things. They're disciplined. They teach a good education with it as well, which I love. Get linked up with one of those folks and learn. Okay. And then once you learn, you have to stay disciplined to that matter, right? And there's all kinds of little snippets of when to take profit, when to take loss, and all that kind of stuff. And we'll get into that along the way here on our journey. But man, you have to have that plan. You have to be disciplined because you're fighting a little bit of an uphill swim to get into this position and get out of it, right? You're giving up edge on both ends. So you got to be crystal clear on what you're doing.
And the neat thing about that, and this was unplanned, but Tradier Hub has a menu of educators and the top ones. So if you want to go check those out and you don't know where to get started, go there. Tradier Hub.
Right. Well, that's a great. I'm glad you said that. That's a great segue, and we're gonna close here. That's why we did the hub. That's why we're doing the hub. Right? Is trading alone, isolated. It's the worst. It's the loneliest feeling. I hated it. Being up on a screen, not being able to interact with my market maker buddies and talk and see order flow. It's hard.
There's probably a million spouses being tortured in the middle of the night over trades.
Look, I was tossing and turning last night. So no, it's tough. And you need to have kind of a life raft or a life ring of some kind. And we're hoping the hub can be something like that, where you can come to it, you can learn, you can listen to great educators, you can listen to their strategies. And again, you got to find something that fits your personality. Some people are day traders, some people are, swing traders, some people are investors and hold positions. You got to figure out what you are. I was always, immediate gratification. So that's why I love the market making thing. It was immediate gratification, right? And I'm not very good at putting on a position and closing my eyes and, knowing what my thresholds are and saying, hey, this is where I'm out for a profit. This is where I'm out for a loss, and move on to the next thing. That was tough for me to learn.
Yeah.
It's still tough. So anywho.
Discipline being the main word.
It is.
That's the key word.
I hope that all makes sense, Mal.
Always. You are a great educator.
Oh,
Lex.
Listen to you. You have to say that sort of, I think.
But the best way to learn is to teach. So
That's right. I love teaching. So, and don't forget, for folks watching, you can always get an online demo with me. We won't share that link in this show, but we'll share it in another show. So you can set something up on the calendar and we tape it and we talk about options in the platform. So really encourage folks to do that, to learn how to use this platform, because it's super powerful, especially if you know what you're doing. Okay. Great. All right. We got to run. I will see you tomorrow. You're on the beach.
I'm going to be very busy today.
Yeah. So you go stay busy and get a tan, will you?
All right.
All right. We'll see you on the next epi. Gets the closing bell, Mal. Bing.